good morning, all of you joining us from many different places around the world. Please feel free to introduce yourselves in the chat. We'd love to see who you are, where you are, and what you're working on. And welcome to this Ask the EdTech Investors Anything session. My name's Hege, and I am Head of Community at Brighteye Ventures. We're excited to join forces with our friends at Sparkmind Ventures to host this event here during Oslo Innovation Week. I'll try to keep on top of your questions. Please keep them coming in the chat. Before they start answering, we will, of course, let partner Hege Tollerud from Sparkmind and Alex Spiro Latsis, partner at Brighteye, introduce themselves and their funds. So welcome on stage. Let's see what you've got to say. Hege and Alex, please join me. Let's start. Hi, guys. Welcome.
Thank you so much.
Thanks, Hege. Thank you. Hege, shall we start with you in Helsinki? Welcome. Great to see you. And
thank you so much.
You and Sparkmind.
As everyone can probably see, I'm not sitting at the office. Our 6-year-old is having a bit of temperature, so I'm at the home office and obviously sitting in my wardrobe. So just very briefly on my professional background, so you get a bit of context. So business school, entrepreneurship, finance, 8 years with tech startups here in Finland, then a couple of years of management consulting for listed companies, and then prior to setting up Sparkmind, 8 years at Sanoma Learning, which is the biggest educational publisher in Europe and arguably one of the biggest edtech companies in Europe. I was leading strategy and then M&A of that division, and also part of the team setting up Sanoma Ventures back in the days. So that gives me, I would say, around 20 years with startups and around 10 years with edtech, kind of broadly speaking. Sparkmind, we started investing in January 2020. We are laser focused on edtech. The fund size is 55 million euros. We do operate a global mandate, so we're basically open to invest anywhere. But we do tend to focus on Northern and Central Europe. We do have a couple of satellites that we are pretty active in, Singapore, Hong Kong, and Australia being a few of those. We have done 9 investments so far. Typical ticket size from 500,000 to 3 million euros. We are comfortable in leading rounds, but also, super eager to co-invest, and naturally, Brighteye is one of the preferred partners for this. We've been looking at a few joint cases, not completed yet, but looking forward to it. And we do invest in all segments of education, so from early childhood education to K-12, higher education, professional development, lifelong learning, all of it. The key question from our side typically is whether pedagogy is somehow in the center of the product. So if it's just kind of back-end IT efficiency for schools, then we'll leave it to others. But we want to understand the kind of pedagogical use case of the product or the service, and that's where we get excited. Thanks.
Great. Thanks.
Thanks, Hege. And yeah, we're very much hoping to collaborate on something soon as well. So I'm Alex. I'm Greek and English by background. I grew up in Switzerland. My professional background is mainly in the field of entrepreneurship. I started my first company at 26, which is a publishing company. So again, there's a publishing theme at some point in everyone's edtech or education career, where I was in charge of a relatively large list of books, both fiction and nonfiction, in an editorial role. And then I moved into content licensing, again with a focus on K-12 demographics. I was licensing TV development programs and film development ideas to big studios in the US like Disney and Sony and DreamWorks and Netflix. I co-developed one of the first 5 Netflix children's originals, which has won Emmys and BAFTAs and is actually based on of all things, based on a fictional Scandinavian character called Hilda. And then as the sort of children's media landscape started to be disrupted through technology, I started a gaming company which was building learning games for children between the ages of 3 and 9. Got those games out to millions of kids all over the world. It was a company called Minilab. And those games were mainly focused on early literacy, numeracy, and STEM subjects. And as I was sort of in the sort of third life of my career in software, I realized there was a burgeoning tech scene in Europe around sort of education. Particularly, obviously, I saw it directly in the K-12 space, but it was proliferating throughout all subsectors of education. And there was no smart capital at the time back in 2017 to chase those opportunities. So we were fortunate enough to raise our first fund back in 2017 and start deploying then, which was really kind of the nascency of this sort of ecosystem in Europe, and based out of Paris and then later London. And now we're on our second fund, which is a 100 million fund. Which will close at some point in the new year, and really we focus very similarly to Kai and Sparkmind. We focus on companies at seed and Series A stages. We make a few sort of what would be considered pre-seed investments as well out of our Blink portfolio. And our ticket sizes range similarly from, sort of $500,000 to around $3.5 million. And the person who's not here, my partner Ben, comes from a similar background in media and EdTech, where he started a VC fund in the US focused on the sector. So yeah, we're very excited about the sector. We're very excited about the opportunity, obviously, in the Nordics, and looking forward to working with our friends at Sparkmind, hopefully on some deals there. In terms of the subsectors of interest, really, very simply, any technology that enables learning on any scale. So and for any demographic. So we will look at even compliance training. We will look at the back end infrastructure stuff. We'll look at the more entertainment focused side of things and the intersection of entertainment and learning. So one of our companies, Epic, which recently exited to Byju's, was very much a very good illustration of the sort of consumer edtech companies that can be built to scale. That's something that interests us a lot as well. But equally, we've invested in one of the largest driving schools in Europe, which is Ornikar. So really kind of any training, any learning online, that's our focus. So yeah, I'll stop there and happy to answer any questions that you guys may have.
Great. Thanks a lot, Alex. Thanks a lot, Kai. That's a great introduction and hopefully will spark loads of questions from the audience. We did ask for questions in advance and we're very happy to have received a few. I'll start with some of them and please feel free to add more in the chat. I'll try and pick them up related to what we're talking about. Kai and Alex, you've set the scene pretty well already, but we'll start with one little bit of an overview from Dan Block at Mercy Corps, who's in the US and he's asleep, but we'll make sure he gets the link to the recording. Dan's asking, what are the top 3 trends you're seeing in EdTech in the last 12 months and in the next year? Who wants to go first?
Yeah, I can take this. I don't know if Kai's video is working, but anyway, so I mean, there's is it okay? All right. So there's 3 broad trends that we see a lot of, and one of them is the sort of unbundling of post-secondary education, which is really a big theme. It's just this idea that universities are not really providing access to skills fast enough, and so how can you sort of break up all of the different skills acquisition needs in the post-secondary world and offer them to learners either more directly or faster or more efficiently. So we're seeing a lot in that space. We're seeing a lot in the community learning space, which is essentially leveraging social experiences in order to and cohort-based experiences in order to increase and improve retention in online learning experiences, and that's been it's been a lot more successful than prior models, which are mainly based on content and content repositories and sort of spaced learning. So really this sort of idea of building a community and leveraging that community to improve and increase retention and completion rates. And then I'd say the third trend that we see quite a bit of is things that touch on the on the creator economy. So the creator economy obviously is, everyone talks about the ICT sector really being the future of the workplace, and everyone's very much focused on sort of how acquiring skills for the ICT sector is really crucial for participating in the workplace of tomorrow. But actually, there's this other huge sort of growing sort of area of new professions around creating and around the creator economy. And so tools that help people access that knowledge, are of great interest to us. And we've made a couple of investments publicly, and then some soon to be public as well in that space. So those are the three that I would highlight. Kai, I'll hand over to you.
No, I think it's a very good listing of the top three. I agree with everyone or everything, and therefore I probably have the luxury of adding a few kind of smaller ones from my side. I think when we look at the kind of demand, especially with institutions, student experience and well-being is something that we see trending quite heavily. Obviously, partly impacted by the pandemic. On kind of skill acquire level or in that area, I think what we see is kind of fast to deploy practical skills. So reskilling, upskilling, but like not theory, but like super practical skills, whether it's coding or something else, but it's really fast to deploy skills. And then probably lastly, I would say product-led growth. So the kind of go-to-market model with institutions probably shifting more towards or from push top-down approach to more product-led bottom-up. And this of course has or sets a new standard for user experience and onboarding and all this. But those would be my kind of complementary top three picks. Talas, your excellent points.
That's really great. Thanks both. We've had some questions touching on sort of stages. You've obviously both mentioned a little bit what you're looking for and what stages, but from Oriana, we've got a question like, she says she's had the opportunity to talk with VCs and been impressed with the broad definition of what pre-seed stage means. So what do you see or look for when evaluating a pre-seed stage startup?
Did we lose Hege?
And do you? Couple of questions around like stage, whether do you ever consider investing in pre-seed or even pre-launch stage, and what's the definition of what you mean pre-seed means? If you want to have a little go at that, Alex.
Yeah, I think Oriana is right to say that these are really just pre-seed, seed, Series A. That it's just nomenclature, isn't it? So it's more helpful probably to understand what stage of product market fit the startup has. So I would say at Brighteye we don't really invest pre-product. Okay, so we're not very good at investing in ideas. that have not been realized at all. But if there is a product, even if it's if there's only early traction of product market fit, as long as there's some evidence of product market fit, even if it's with a small group of users, then it's a space we can look at. I'd say where we're most comfortable investing is definitely after there's been a degree of product market fit and after there's enough data to demonstrate things like retention and churn and and then more granular data around session length, the number of messages, or any data we can get our hands on. Obviously, it depends on the platform, it depends on the service, because there's as many different services in EdTech as there are in any other sector of IT. You can have social platforms, you can have marketplaces, you can have games, you can have all sorts of different things. But we like to look at data, we like to look at numbers, and so it's important for us for there to be a product and for there to be at least the beginnings of product market fit, so we can evaluate it.
So Alex, I think I'll just move on, and I think we'll do a big challenge one. Going for the hardest question: what is the hardest, most painful problem we are yet to tackle through EdTech? Putting me on the spot. From Sandra. So what's the hardest, most painful problem we are yet to tackle through EdTech?
I mean, I think one of the hardest things is the next few years, at least, on the near horizon, is really helping children in K-12 get back up to speed, and also in post-secondary get back up to speed in traditional institutions, and how we can leverage education technology to do that. Obviously, there have been very unfortunate and huge learning gaps created by children not being in school, not being in university. And although as EdTech investors we very much advocate for distance learning and the power of software, it's clear that children having social interactions in schools, being in a physical space is important. It's an important way to motivate them to stay engaged. So I think really it's been in some respects very positive for them to engage with learning through software alone and online, but I think they've missed out on a lot, not just on the social side but also on the learning side. So I think how can once we get through this pandemic and once children are able to go back to a more regular a normal sort of experience of school, how can we then use education technology tools to help them catch up on the things that maybe they missed out on, and that's going to be a huge problem everywhere in the world. So I think after school sort of training and after school learning it's already a big part of what's happened during the pandemic, test prep and tutor platforms, but I think it's going to continue to grow and continue to be an interesting space.
For me, it's still about, for example, for online learning, what I would love to see is our practices of online learning being developed. The kind of how do we interact online, not just one-to-one, but one-to-few or one-to-many, and that type of concept or behavior to develop. I think that would unlock quite a bit of the challenges that we might be seeing with kind of one-to-masses online offerings. And yes, of course, I mean, infrastructure, depending on the market where you are, is obviously one of the kind of critical questions. And then if we look at the institutional side of things, then of course allocating sufficient funds, not just for the licenses but also for training, so to kind of to raise the level of the whole educational landscape, so to say.
Great. I'm not sure if you can hear me again, Kai, but I will just continue. Moving a little bit more into the direct investment area, I pick up a question from Mika Kasanen at School Day. What type of impact areas and KPIs are you typically looking into? So the impact areas, especially when considering and evaluating an A-round investment. If you want to start,
yeah,
Alex.
I can kind of start while you write the question for Kai, because I think he still can't hear you. So just on the impact side, obviously tracking impact is important when investing in education technology, because usually impact translates into business success as well. So if you can demonstrate things like completion rates, or you can demonstrate things like placement rates, in jobs post completion, those are some ways of demonstrating impact. And there are also obviously key ways to market the key ways to market the service or the product to new adopters, right? So in the case of Ironhack, for example, which is in the Brighteye Fund 1, they have around a 90% placement rate. So 90% of the people who complete the courses at Ironhack then go into a job where on average their pay will be around 50% more than prior to taking the course. And so that's obviously evidence of great impact and effectiveness, but it's also a great marketing hook to get new learners, because anyone can see the benefits of doing a short 3-month or 4-month course in order to get access to better opportunities. But we look, to break it down, we look at sort of 4 things mainly. One is does it make learning more affordable? Does it make learning more relevant? Does it make learning more effective? And does it make learning more engaging? And those are the ways that we measure impact internally. We don't have we don't apply a specific framework like GIN or others, but the way that we look at it tracks quite closely with frameworks that are out there.
To complement on that, not surprisingly, we look at things pretty similarly, perhaps a bit different wording. We typically start with product relevancy. So use case, always contextually. So it might be that it's supposed to be used daily, or then quarterly, or even once a year, but it has to be a meaningful session. And we want to say, the first days, you don't need to have 100,000 users. You want to see highly engaged users. That's for us all about product relevancy. So that's where we start. And it might be about the session length, but not always. It's about getting the kind of job done for the customers who are using your product. Whether it's Jean Ellis product market fit scale or anything you want to measure on top of that, absolutely fine. Then we probably look at unit economics, so just to make sure that we're on the path to profitable business, and we understand what's the cost of customer acquisition, lifetime value, so forth. And then I would say we kind of start to slide more towards the customer momentum or commercial momentum. So usage growth, user-based growth, MRR, churn, the usual stuff. And then I would probably add on top of this burn, not just to understand the runway, but to see if the company can actually perform kind of magic on affordable amount of money.
Great, and that brings us.
And of course, then the further you go with your business, then I think the product market fit starts to kind of fade to the background, and we focus more and more on the commercial side of things.
Cool. That brings us, I suppose, also even more into the actual specifics of valuations and models. And from John Su, for Series A valuation of EdTech subscription models, what's the standard multiple for ARR?
So I see the next question would be the Series A valuation for EdTech subscription models.
Kai moves on with that.
And multiple on ARR.
Yes.
If I may take the first stab on this one, my first observation is a bit kind of ambivalent, because a multiple is always a snapshot of time, and that misses the momentum. So it only tells you the level, and so it's really about two factors for us. One is the level, and the other one is how steep is the curve. So the multiple will be heavily impacted if your business is almost flatlining, or if it's going like super steep upwards. It's pretty hard to give an estimate on kind of generally applicable multiples. But what we have seen for businesses that do have revenue, say 500,000 to 3 million ARR, it varies between, I don't know, 5, 6 up to 15, almost 20, depending on the market. I think here also it's a bit, there's a bit of differences between the markets. If you look at US or India versus, for example, Europe, we see higher multiples in US compared to Europe, and then again India and China, at least, well, China used to be higher compared to US, and it's, our guess is because of, or the way we see it is because of the scale of the market, and then secondly the money available to the market, because in my honest opinion, I think Europe is still undercapitalized in terms of VC for EdTech, and that, you know, tends to drive the valuations. Kind of it limits the valuation so that you don't see ridiculously high valuations that arguably you might in some cases see in US or India, China, for example.
Yeah, no, I would definitely agree with Kai. I think it's very difficult to, you know, there are ranges, but it's very difficult to say this is a multiple for a subscription business in EdTech. Really, the growth rate is the single defining factor of whether it's a high multiple or a low multiple. So that's absolutely correct. I think you know, it's also a factor of competition for the deal. Obviously, if it's a hot deal, then you'll see high prices being paid. It's a factor, as Kai mentioned, of the size of the perceived size of the market. So even though Europe is a much larger market than the US, because it's heterogeneous, because there are lots of different languages and different nations, people often discount the value of the European market as a whole. And they see, you know, US as a homogenous market, India as a homogenous market. Although, of course, if you look at India, there are hundreds of different languages in India, religions and everything. So it's not dissimilar to Europe, but, you know, they're principally people speak Hindi and English. So I guess, but this perception of sort of linguistic, cultural homogeneity usually adds a premium to valuation, right? So, you know, it's quite easy step for someone to take logically to say there's 350, 360 million people in the US that speak English. So, you know, there's however many hundreds of school districts. If I get a product right, I can scale it to 350, 360 million people, you know, in a relatively short space of time, right? That's the common sort of thought process. It definitely is harder to scale things in Europe because, you know, Germany and France share many similarities, but also there is fundamental things that are different about the way that that regulations work, the way that schools work, and incentives work. So it's true. But I would say that yes, you know, there's definitely a discount valuation in Europe, which is again because it's undercapitalized and also because there's this perception of fragmentation. So it's always hard to kind of, there's no easy multiple rule. I think it's the wrong thing to focus on. I think the key with any business, whether it's in EdTech or any other sector of tech, is really kind of traction and utilization. I mean, I think if people are really using a product, it's going to grow. Even if it starts off from a very small base. So even if you can demonstrate with a very small number of people that people are really using it, they're really engaged, they're not churning, they're not leaving, then everything else is marketing, right? Because you've proven, you need obviously a good enough statistical set to prove that it's not just an anomaly, right? But once you have that statistical set, you can say, okay, well, it's 1,000 people, or it's 500 people, or even 40 people who are engaging with it in this way. Then scaling it is a question of performance marketing, And so as long as you have the retention, and as long as you don't have very high churn, as long as you have good utilization, as long as you have good completion rates, then the rest is it's oversimplifying it, say it's just marketing. But effectively, if you have a good product and you have product market fit and you invest in marketing, you can scale it.
Completely.
And when you see that's a hot deal. It could be a tiny deal, but it could be extremely hot and high multiples.
If I may add one more dimension to the kind of US Europe comparison, I think one factor that we sometimes do forget to talk about is the competition between the EdTech. So when we do see deals taking place in US, we also need to remember that the number of EdTechs competing for that finance in US is huge. So we see absolutely the sharpest peak of the market, and if we then kind of take that as the kind of benchmark level and bring that to Europe, or even to Finland, being a fairly small country compared to US, then of course it's not given that all the EdTechs here would meet the criteria of the US investors. So that's also one of the potential factors explaining differences in valuation.
Great, thank you both. I think I'll move a little bit back to trends, because we had a very specific question on trends, and it's again on the Europe-US sort of difference, saying from Kirill that there's a new trend in the US K-12 D2C targeting kids directly and looping in parents only when it's time to pick up the bill. Will this work in Europe, do you think?
It shouldn't technically work in the US because of COPPA, right? So COPPA is the Children's Online Protection Act, and you're not allowed to market directly to children. So obviously that's the technical side of it, and in practice people still try to get around it. I think that GDPR obviously has been in place for a number of years now. That provides another degree of protection on top of COPPA. Companies focused on K-12 have always been respectful of COPPA, because one of the largest markets, as we've just spoken about in the world for EdTech, is obviously the US, and you don't want to build or develop a product that you can't scale in the US, especially if you're a European company and your home market is small. So I'd argue that it's not actually that easy to do legally, but clearly people try to do it. I think what happens more often is that, so this is what we saw. Obviously, we've got a very specific experience of it, but what we saw with Epic was it wasn't actually companies targeting children and then getting the parents to pick up the bill at a frustration point or at a kind of a paywall. It's actually companies targeting teachers with free tools, developing patterns of usage through teachers, with children, and then sort of encouraging parents to subscribe or to pay for use at home. And that's the model that Epic obviously took, and that's one of the reasons they were so successful and grew to 95% plus of US schools, was because they were giving away free tools to teachers, and teachers don't have discretionary budgets. And I mean, virtually anywhere in the world, a teacher can't just choose a piece of software and go to the to either the superintendent or the head teacher and say, I want to buy this, what's my budget? And so if you give them free tools and then you monetize the sort of, the at-home interaction, I think it's not only a fair way of kind of marketing products directed at children to parents, but also you're giving a benefit. You're giving a sort of pro bono benefit to sort of resource-constrained teachers, and also encouraging them to sort of push those tools up to administrations, and then at the sort of administrator level, then making them pay. So I think that's been more effective probably than trying to trick parents into paying for stuff for kids. That's just my personal opinion.
That's great. Thanks, Alex.
And I think just to comment on that, I think it's partly about monetization model, but it's also about the habit creation. So if you can create a link between classroom usage and potential home usage, that helps quite a bit with the market entry to home market. And I mean, if we look at, for example, Schoola from the Dutch market, I think that's entering the market with basically math drilling platform, free to use for teachers, and then you kind of tapped into the math tutoring market at home if you want to use it outside school hours or outside school room. So
yeah.
Thanks, both of you. I'll move on to some of the mistakes that can be seen from EdTech companies from Michael Yacht.
So common mistakes.
Some of the common mistakes and mishaps you see in EdTech companies, especially in Europe?
See with EdTech companies, especially in Europe. Should I give my first kind of immediate response to this? I think what we see is one of the biggest pain points is customer or user onboarding, and how to nail that. And it then again kind of boils down to what we think we see is the product-led market or product-led growth. So we still see quite a few offerings that require quite a bit of effort from the user perspective just to get onboarded. And I'm not talking only about the kind of technical side of things, but just the time from first contact to the first wow of using the product. And if you can make that journey as smooth as possible and as potentially as short as possible, then I think you are already quite well positioned.
Yeah, no, it's a really good point actually, and it's funny because in the gaming world, user onboarding is honestly the first thing you have to do when you develop a game. Is obviously you have the rubric of the game and you have everything set up, but before you launch, you need to have a version of onboarding, right? So that people know where to find the different bits of user interface. They know how to actually engage with the product, and so for me, it's always been this sort of intuitive thing of how can you automate people actually learning how to use this, because you have tools in SaaS like Salesforce, and you have entire companies that are built, large companies are built just training people how to use Salesforce, right? And so if you can develop tools, whether they're SaaS tools or direct to consumer, where the user can onboard themselves easily, I think I agree that is usually one of the pitfalls of focusing too much on the product without thinking about how new initiates are going to engage with it. And it can be a very costly expense, very costly mistake. The other one I'd say is it's kind of it's spending a lot of effort and energy on developing solutions to nice to have, sort of nice to have tools, right? There are all sorts of, sort of ways of calculating a SAM or a TAM in a particular market, and then saying, there's this huge opportunity, and we're going to take X% of the market, and then developing this amazing tool. But when you really get down to the sort of, you know, the willingness to pay, it's only really going to be driven by fundamental needs, right? So you kind of, if you develop this amazing thing, but actually it doesn't have its place in someone's life or in someone's career, or it's not supplementing or replacing something that already exists, or making something more efficient that already exists, or more engaging, you know, then you're not going to, you may have adoption, but you're not going to have stickiness, you're not going to have willingness to pay. So in our experience, you know, focusing on need to have, so, you know, that's why addressing the skills gap is such a good way of driving willingness to pay, because people are terrified that their educations are, you know, becoming irrelevant, essentially. You know, I you know, when I was at Oxford, I read history. I think it's hugely relevant to everything that I do today. But you could argue, you know, well, what use is a history degree in today's, you know, workplace? I'd say a lot. You know, it's very useful. Having said that, you know, I think that fear of, you know, my education that I had 10 years ago, 15 years ago, particularly for older people, you know, isn't aligned to the needs of the workplace today. And how can I get those skills quickly that I need to remain relevant? On the other hand, with children and with younger adults, there's a very similar, you know, kind of, there's a very similar driver, which is, you know, which university course can I pick, or which training course can I pick, or, you know, which boot camp should I join that's going to get me on the fastest track to getting a job at Google, or getting a job at, you know, at a startup, a high growth startup that I respect. And if you can demonstrate that, you know, you can access that opportunity better, faster, cheaper through some tool, then you'll get people to you know, to take out their wallets and pay for it. So I think, you know, this sort of, you know, the finding a key driver to adoption, you know, that isn't just the product. It's not just the enjoyment of using the product, but actually something that is important in people's lives, I think is, you know, that's often missed. You know, and it's a shame that a lot of resources are devoted to things that people actually don't need, unfortunately.
To build on your comment, Alex, one of the challenges we see with some of the products that might be actually hugely useful and valuable is that you don't have a clear one person owning the pain or the benefit in the buying organization, if it's not a consumer. So you end up kind of selling to, say, 5 different stakeholders. None of them will be rewarded hugely if it's a successful tool or not, and none of them is, you know, struggling with that pain daily. And that means that everyone might be kind of nodding, but then nothing really happens. And that's if you know, if you are able to pinpoint, you know, let's create first let's solve a daily problem of a teacher or learner. You create that habit, and then you kind of crawl back or kind of crawl up and say, now we need the money, we have the evidence of impact, better learning outcomes, or more efficiency, or better reach, or whatever the dimensions are. Then typically we see the kind of the money, the funds being unlocked, because you do have already usage, and you can prove the value. The other way around, probably not that easy, to be honest.
Yeah.
The other thing I could say here is that we simply love cases or companies that approach us when actually they don't need the money yet. So it's just so much easier. Establish connection. You know, let's have a short introduction call. You know, get back to us, say in 3 months or 6 months when you actually start fundraising, and please do that in you know, with plenty of runway left. I think your position is much better then, and you don't fight the kind of immediate cash crisis. And perhaps there, if you are looking to raise money for internationalization, or, you know, going to the next market, would be great to see that you have already taken a few steps toward that direction. So it's not a complete black box from the VC perspective. You have a bit of traction. That doesn't have to be much, but just the first steps.
That's great. Some great advice from Kai there on advice to founders that are working to grow their edtech. Do you want to add something to that, Alex? Some good advice? Who do you want to hear from?
Yeah. I mean, I think no. Honestly, I know that we're agreeing on lots of things, but I think that's why we get along as well with the guys at Sparkmind there. In any case, it's about evidence and traction, and I think there was one question I saw earlier, which was with social media platforms or marketplaces, how there's a sort of a chicken and egg problem on with marketplaces, the supply and demand side, and what do you focus on first? Do you have to develop both at the same time? With direct to consumer, it's kind of how do you get to your first users? Do you focus on organic first, or do you kind of focus on creating something with good unit economics from the beginning and think about that from the very beginning? I think in both cases, I'll come back to the pain point. If you're solving a key pain point, then these things resolve themselves, right? So there really is no, I mean, how can I put it? Going to the example of Ornicar in France, you had to go to a bricks and mortar driving school. You had to sign up in person. You had to sit on a little car kind of toy thing and go through a simulation before you could even book your first test, right? And before you could even take your theory test. And these guys said, this is ridiculous, and it costs 3,500, 4,000 euros, and 1 million people in France have to do this every year. There's got to be a way to make it better, faster, and cheaper, right? And they did, and then it exploded. And so I think that was a massive pain point. I mean, I went through it myself because I was in Paris. I had to get a driving license over there, and it was a nightmare. So I think that in the case of a marketplace, for example, if you're looking at a marketplace, I think I was giving advice to someone the other day, and they were saying, I want to develop this amazing platform, and I want to pair up coaches who can tell people how to be more successful in their romantic endeavors with learners who want to learn how to have more successful sort of a dating education type thing, all in one. And I said, well, you don't need to build this platform. All you need to do is to find your ideal instructor, and then find a small subset of ideal users. You can canvas for them on social media or whatever, and use Zoom. and so the other piece of advice is use lean startup methods. When you're trying to demonstrate these things, when you're trying to demonstrate adoption, you need to have the product designed. You need to know where you're going to head. You can't just build a company off Zoom and Google Suite and stuff. But if you're trying to prove that early traction, you don't need to do it at a very high cost. You can do it actually with so many tools that are free that are out there. So that's the besides dealing with the two main bits of advice, I'll deal with a real pain point, something that people actually need. And the second piece of advice is if you want to demonstrate early traction, there are cheap ways of doing it. You don't need lots of financial resources to do it. And so when we say, well, we don't invest, pre-seed or seed unless there's proven traction, and we say you only need to demonstrate a little bit of traction. But if you come to us and you've essentially conducted experiments that prove that what you have has the right dynamics, has the right features, and is used, then that's kind of enough for us. We don't need to see that you have, as you said earlier, Kai, 100,000 users necessarily. So that's the main advice I would give.
Yeah, I think. And I think again, we are extremely well aligned here. I think if you can find the kind of early champions, creating referrals inbound, creating the kind of gravity around it, then you are off. It's a very strong start.
Great, both. Get a couple of new questions coming in here towards the end. From Jonathan, is a good strategy to allow free usage of the learning platform just to create a critical mass, then go for paid service? What are the risks? If you want to start, Alex, I'll post it to
Yeah, if I may, and I'll try and be brief because I've spoken a lot. There are different strategies. One of them is, obviously focusing on user growth and then layering in, monetization later, which is a strategy that, worked for companies like Kahoot, which are, incredible companies. And Johan, when he was starting, he was very much focused on just, demonstrating product market fit with a large number of users, which he was able to do very successfully. And then later on, they started to layer in various monetization features, and they were extremely successful, and obviously one of the leaders in Europe. So it's not to say that doesn't work. It does work. At Brighteye, we like people to think about how they're going to monetize their users from the beginning, because it is, although it's certainly possible, I think it's a lot harder to sort of layer it in later on. And that comes down, again, it comes back to this sort of what's driving willingness to pay, what's the pain point, to use another example in the portfolio, we have, a company called USchool, which helps people learn blue collar skills. The temptation, because it's a social platform, the temptation could have been to, sort of just focus on giving access to skills and then worrying later about the monetization. But just to get to highly critical mass of users. But actually, because they were dealing with a specific pain point, it was very easy to sort of offer the service at low cost and also drive willingness to pay from quite early on. And so, although they were relatively developed when we came in, it was clear that there was the sort of same viral sort of coefficients and mechanics that you had with other, platforms that were high growth social platforms. But also because they'd already integrated the monetization and they had already worked that out, that user growth and revenue growth were just kind of working in parallel with each other. And that's obviously something that we feel much more comfortable with. Because although we're venture capital investors, we have to be slightly, risk sensitive, because we can't just throw caution to the wind with every ticket. So yeah, I think our culture is certainly to enjoy it when people think about it from the beginning, but it's not the only way to look at it.
Yeah, to kind of build on that, what we see is, of course, there is kind of two layered business models where you create usage and then you monetize it from someone else. Then it makes sense, of course, and that's the model from day one. The other one, or the other way to think about it, is that if you do give it for free at first, then we need to see a very solid and well-argued plan on how to monetize it later. And we are not completely kind of comfortable with the situation saying we just create usage first and then we figure out it later. So
sounds great. We're starting to get towards the end, and we've had a question quite specifically on raising and how to get in touch with you, if it's possible. How would you prefer people to reach out if they feel like they have a good idea that they want funding for? If you want to start, Alex.
I'll let Kai start.
Okay, cool. I've typed it for him.
Oh, sorry.
No problem.
About that.
You're doing okay.
Yeah, I mean, honestly, the best way to get in touch with us is through our website. We have a type form which helps us to deal with with sorting all of the opportunities. We do get back to everyone. We speak to obviously lots of people, but I think I think if we've spoken before, then we probably would have given you some indication as to when would be the next time to reach out to us. Sometimes we'll reach out to companies out of the blue as well. Obviously, it's still worth sharing your story with us whenever you can. We have a sort of open question session which we all engage with, which is on our website. It's called VC Question, so you can get honest feedback on one burning question, 15 minutes basically, and you will either speak to a partner or an associate or a principal at the fund. It's a good way of just kind of getting to know us. It's not a pitch. It's not a fundraising pitch, but it's just a way to meet and for us to kind of open up our office hours to people. So I think those are the best ways to get to us. But yeah, I'll hand over to Kai.
Yeah, thanks. Basically we have the same, surprisingly. So website, yes, there's a form at the end of the page. Submit your pitch, and it will take you directly to our deal flow system, which means that we will be reviewing the deck next week, Monday by latest, and we will get back to you. We love to meet with entrepreneurs, so please feel free to contact me via email or anyone from our team, or call. We'll be happy to chat.
That's great, and I think that's a very good way of wrapping. Thanks a lot to everyone out there who's been asking questions, listening in, and of course, huge thanks, Alex, Kai. Sorry we had a bit of trouble with hearing each other, but I think we managed to get around it quite okay. Please follow us and Sparkmind on social media for any updates, news on coming events. And finally, thanks to Oslo Innovation Week for hosting us, and congratulations to Tom, Martine, Siv, Frederick, and the team for yet another brilliant week of events. Next year, we're hoping to be in Oslo in person. Thanks, Alex. Thanks, Kai. Thanks, everyone. And I'll see you soon.
Cheerio.
Thanks, everyone.